What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at SoFi Technologies, ticker symbol SOFI, on a variety of time frames in anticipation of the next trading day, Friday, February 9th. Well, SoFi stock here today on the move, up 42 cents a share, 5.48%. And after it's all said and done, basically flat after hours, up a couple of pennies. But listen, hey, we saw this big fade after hours and we grinded back upside and popped right before after hours closed here on a Thursday night. As always, listen, whether after hours movement is in your favor or against you, you have to take it with a grain of salt. Unless, of course, volume nearly meets or exceeds regular trading hours. That is very rarely the case. Typically takes a massive news event or earnings for that to even be remotely possible, okay? But on any normal day when volume is incredibly low like today, take it with a grain of salt. Let's zoom in here on the 1 minute chart and take just a quick look at the intraday volatility that we did see. You see here that we had a decent little rejection setup that formed here on SoFi. However, SoFi being a lower price stock, the channel was a little tight to justify the spread for any intraday scalp opportunities for me today on SoFi. By the way, if you guys want to get my personal intraday scalp setup alerts, my swing trade setup alerts, unusual options activity, which is human verified by me, or even platinum one-on-one coaching with me, take a look at that first link in the pinned comment. The prices do go up over time, but you can get grandfathered in at the rate that you join at, and it'll never go up on you when you get grandfathered in for as long as you retain your membership. Hope to see you join. Let's now take a look at the volume here, today being a relatively big up day, on the intraday of the 5 minute chart. Okay, so we're looking here, we're like, okay, we had this midday pullback, and we had this relatively big opening drive. Now, if we look at volume, okay, pullback had pretty low volume, opening drive had big volume. We actually saw the biggest volume candle on the day, not off the open, but at the peak of that opening drive run. Okay, listen, that's the bulls are going to be happy about that. I think that's something the bulls want to see. The bears, you would want to see something opposite of that. You would have wanted to see on a daily today the most volume of the day. Ideally, I know it's tough because it's the middle of the day. It's kind of like lunch hour in New York, but you would have wanted to see bigger volume on that pullback, right, and lower volume on these pumps. However, of course, we saw the opposite of that today, which is going to make a lot of the bulls happy. One factor, but better than the alternative. Remember here, why are we even looking at this to begin with? We're always looking for volume that very clearly shows, big volume pumps and big volume dumps that correlate with movement in the stock, okay? And, whatever your bias is, you're looking for big volume when it's going with your bias and as low as possible volume when it's moving against you. Let's now zoom out to the 30 minute and start looking at our contextual day-to-day self-fulfilling prophecies for levels to watch. Listen, this is such a big up day that on the 30 minute chart, the nearest level that I would be watching, that 50 period moving average, is nearly 4% away. It's 3.93 approximately percent to the downside away of making a test of that. So listen, I'm keeping an eye on that from a bullish perspective. I'd want to see that 50 period move up, and remember, get feet up underneath the move as quickly as possible, just as another psychological potential safety net. But if you're a bear here, you want that 50 period and that 200 period, of course, staying down as long as possible, specific here to the 30 minute. Let's move on now to the 4 hour chart. Take a look. This is, of course, a little bit more relevant in the near term here. You see, this is the 50 period. Let's actually zoom back out so we can get this contextual, a little bit more contextual. You see that here, this white line, the 50 period, is currently an area of interest. So looking specific to the 4 hour chart here from a bullish perspective, if we see a back test of that 50 period, I want to see that hold. And if we continue to see upside and a test of that 200 period sometime here in the near future, that currently being here on the 4 hour, approximately 5% away. But listen, today was a 5.5% up day, so anything is within range here, seemingly on SoFi. An up test of that as a bull, you'd want to see that break and back test ideally and hold as support, ripping up out of the hole, looking toward that previous high that we've seen, right in the mid-9s. Now, if you're a bear and we see an up test of that 200 period here on the 4 hour, you're going to want to see that reject as hard as possible, right? And make our way back down toward the 50. But really, if you're a bear, You don't even want to have to deal with that. You just want to break downside below 8, below that 50 period as quickly as possible. Okay, let's now take a look at arguably the most important chart here, which is going to be the daily, because this is incredibly relevant right now. We have the 50-day moving average currently right around 838, and the 200-day moving average currently right around mid 790s, 794, 793-ish. Now listen, this is going to be the most commonly watched chart on SoFi, the daily with the 50-day, right, that white line, and the gray line, the 200-day. So here's what I'm watching. From a bullish perspective, hold the 200-day as support. Ideally, hold above the 200-day at $8 a share. That psychological round number, ideally hold that. Then look to make our way up toward a test of that 50-day right around 838, 840. Ideally popping through there, getting up through 850, holding the 50-day as a new support level. Okay? From a bearish perspective, if we see an upside test of that 50-day on the daily chart, reject it hard before 850 ideally, but really get below $8 a share and get below that 200-day moving average as soon as possible here. Now let's take a quick look at volume here. I always like to see as much volume as possible. It just like, especially from a bullish perspective, it just shows that there's interest. Okay. Now interest on SoFi, yeah, it's a cheaper stock. It's about $8 a share, but I mean, we're still seeing like 45, 50 million shares traded a day. And you know, even though we faded off of that, of course, the earnings day, but even since then, that's expected. And we are slightly above average still here on SoFi in terms of volume. Implied volatility, sitting in the low to mid range compared to the last few months here. Just understand, if you've owned options through earnings, you've likely seen some IV crush take effect through the Greek Vega. This here is the culprit there as this comes down. But again, as IV goes lower and lower, typically the option traders are seeing the stock as a little bit more comfortable at the current price as that IV comes down. But also it opens up the opportunity for new options buyers to potentially, if they buy when IV is low, to potentially experience some IV pump as IV bounces back up toward equilibrium if we were to see that happen. Now let's take a look here at the options bias here today on SoFi. Actually decent sample size today on SoFi, nearly 250,000 contracts traded total. And this is absurd here, look at this. 199,000 calls, 50,000 puts. Nearly 4 times the bullish bias to the call side than the bias to the put side on the overall call put ratio here, okay? Now, those short-term speculators, the 0 to 20 delta, right? Those short-dated, out-of-the-money, cheapy calls and puts, 47,000 calls, just under. Nearly 47,000 calls, and just under 20,000 puts. Okay, more than double the short-term bullish speculation compared to the short-term bearish speculation. Again, you know, we're not looking at a sample size of millions and millions. So the smaller that sample size gets, the more and more you have to take it with a grain of salt. But, you know, this is the data. This is not opinion-based. This is just what the option traders are telling us today. They are leaning slightly to the call side. And you know what? I hesitate to say slightly because those are some big biases that we're seeing here in the chain today. But again, listen, risk management around here is always number one, and the options traders can absolutely be wrong. So please, again, number one around here, always make sure your risk is managed. Nothing will surprise you at some point when you've been doing this long enough. Listen, if you got value out of this video, consider joining a membership at that first link in the pinned comment. Also, hey, hope to see you subscribe to the channel. Helps out tremendously. And I'll see you in the next one.